Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Alright, so let's unmute here so we can let the people in the live chat here. Okay guys, I'm recording and now I'm just going to do a very quick recap on what's going on, and starting off with the dollar. So dollar's been performing as expected since we've broken down from this blue zone. Now it has underperformed, at least in my book, where I was looking for a bounce here and I was also looking for a bounce somewhere around here. We didn't get it, but now we've come into this very important ascending trend line here. Okay, so like I've been saying over these last recaps, watch for this ascending trend line to eventually break. However, it is still very likely we do have a bounce before this break. Okay, it is still likely, even though now we're still trading within the general zone, we haven't had a decisive breakdown. Okay, as you can see, we've been breaking down for a couple months to almost a full year, and as we've come lower and lower, we've been really slowing down the velocity of the drop. Now we'll see as we go into the futures today, and then also when market opens tomorrow. Is the dollar going to hold this general zone? Is it going to gap down? Or is it going to finally get some strength and pop up? Now, there's a lot of evidence, in my opinion, where we will see the dollar continue to kind of trade in a very consolidative state. Okay, so you're going to see it kind of trade here for some time, and we're probably going to see the dollar sit here around 100 to 102 for a good chunk of time. Okay, so I am looking for a breakdown towards 100.39, and then eventually starting to trade near the top of this blue zone. But I would be very surprised if we immediately break down towards 97.32. Okay, but once we do get down there at some point, whether it's within the first 2 quarters of this year or going into later this year, this is a monthly descending trendline structure. So the monthly broke bullish, and now we're finally retesting that breakout structure, and it's very likely we'll hold that bullish, and then eventually over the next coming years you'll probably see the dollar rise. And again, a lot of reasons why the dollar will rise is because you have foreign fiat currencies collapsing against it. So even though the dollar's getting stronger, it's melting up to death. That's why I keep calling this decade the dollar decade, the decade of the dollar, because the dollar is destined to continue rising higher as all these other fiat currencies are collapsing against it. Okay, all right, now let's go quickly to the Dow, S&P, and NASDAQ. So Dow has been trading within these fair value gaps here. Actually fully filled out this bearish fair value gap, so we actually take that right off, and it tapped right into where the smaller and larger fair value gap here overlap. So remember, I kind of pointed out, when you start seeing these overlapping, this is where you're going to see a big crux of liquidity kind of residing here, and we immediately whipped into that and failed off of it. Now we have some evidence here that we will see some downside. Okay, now it looks like we're tightening up, so we're in a triangle structure. All right, so this does give me some confidence that we will see the dollar short term have some strength to the upside, not major but short term, which will correlate with the Dow kind of trading lower and probably making another higher low in this triangle structure, this symmetrical triangle structure that's potentially forming here. Okay, so watch for this to potentially play out. If we break down, it's the same as we've been saying. We're breaking down back towards this descending trend line, towards the breakout, and then back down towards these fair value gaps down here to grab the liquidity there and under this pivot and under this pivot. All right, so there's going to be a grab of liquidity if we break down from this triangle, and then I would look for it to make a higher low around this zone from the low down here. Okay, next is S&P, so we'll quickly go to that. Again, we're kind of repeating a lot of what we went over, because again, we've been kind of charting these since like February of 2022, and it's been following the general path. For the most part, we've been pretty on point. It's surprised us here and there, but nothing too crazy. Now the S&P has performed exactly as expected, as I saw that we had a pretty important change of character, right? So like I've mentioned in the last recap, we started this downtrend after making the all-time high and breaking down for pretty much all of 2022, and then finally you had that hint where you're making lower lows, right, and you're making lower highs. So right here and then here, But what changed is you made your first higher low, right? So after this lower high, you made your first higher low, then you made another, lower high, but again, another higher low. And this is a hint. Whenever you see this coming into a sloping resistance, when you have this change of character and it's tightening, this is a hint that the resistance is likely going to get challenged and likely break if it's been tested consecutively in quick succession. Okay, in quick succession, that's very important. So you had the breakdown, then you had a good chunk of time where price wasn't near the descending blue line, and then you come at it here, small breakdown, right back at it over a couple of weeks, and then back at it again. So this whole area right here was a lot of testing that descending resistance, and then eventually broke. So you do have to look at trend lines, and they're not concrete. Timing matters. Timing matters in trend lines, whether it's sloping, whether it's horizontal. Timing is very, very important. It determines the strength and validity of a trend line. And in the context, if you're testing something consecutively in a rapid pace, it's weakening. But if you test something over a long period of time, right, over a long period of time where you've touched something 1 year and then 2 years later you touch the same place, and then 2.5 years later after that you touch the same place again, that's not weakening. That's valid. That's like it's becoming more valid. It's becoming stronger. That means there's a lot more resolve at that level. So you do want to make sure you understand context of trend lines, because trend lines, you'll find that price will blow through them, but there's usually always a reason. All right, next is NASDAQ. So NASDAQ breaking up, and I did warn, when we were coming into minor resistance for the S&P and the Dow, that if they found the upside, which it was, it looked like they were probably going to, the NASDAQ would have a very aggressive move up towards this fair value gap and really towards the lower end of this green zone. Because if you look closely at the Dow and the S&P, they've outperformed the NASDAQ to the upside, whereas the NASDAQ has outperformed them to the downside, right? So the NASDAQ has had a lot more selling pressure over the last year, which makes sense because its sector is mostly risk on. It's mostly the tech sector. So it made sense that this was really, really sold down, as it is overinflated even compared to the NASDAQ, compared to the S&P and the Dow. So this has a lot more room to the downside, but it has been underperforming any bullish bounces that you've been seeing in the S&P and the Dow. So it's catching up now. I do think you're going to probably see another extension higher, at least towards the low end of the green zone to the top end of this bearish fair value gap. And remember, I am bearish, looking longer term, right? So long term, by the end of this year to next year, I do think we're going to be at lower prices for just about everything. But I am looking at a bear market rally, whether it's in crypto or stocks. It all looks the same to me. So I am looking for, over these next couple months, for continued upside. Okay, so and that's what we're seeing. That's what we're seeing since the new year has started. We've only been going up, but be prepared for any minor pullback to likely be a bullish pullback. Okay, again, price will dictate the truth. We don't trade guarantees. It's all probabilities. All right, next is oil. So oil, finding some selling here. I'm still bullish oil. Nothing's really changed for me. I do think it's just going to kind of trade down near the low end of this bullish monthly structure. But to me, I also see that we are potentially just going to make another higher low and then try and attack this higher fair value gap here around 85-ish and fill out the liquidity there. But overall, if you look at the weekly and monthly charts, let me pull it up real quick. It's a little dirty because of all the stuff I have on here. But just looking at this structure, what's happened here with oil, I think you're gonna see a massive spike in the price. I've been screaming about this pretty much since last year, that you got to watch out for oil, because what's happening is there's going to be this real big crunch of supply when demand is rising. Okay, so OPEC is giving us kind of the the hint, the keys to the future. They're not looking to increase the supply of oil because they don't want to, lack for a better word. They just don't want to, and they probably want the price to go up higher. They're probably not very happy with price being at these levels with rising inflation, etc. So I would be looking for oil to eventually spike sometime in March towards 90 bucks. I think you're going to probably see it spike towards 90 bucks, and it's just going to cause more and more pain in the general economies. And I can't be bearish on this chart. This to me look like it broke structure on the monthly. We're having a wonderful bullish pullback, and I think over the next couple months you're going to see oil trading higher from here. Again, like I said before, we'll see what the price action dictates, but short term look for a pullback, and I would be looking at this bullish fair value gap right here to be the first major area of where we could look for a higher low structure to build. Right, so we've slowly started that. We had the low here, and if we come back down here, you're gonna have like this kind of pretty steep, whole rising structure that will eventually break. This will eventually break down, but it looks very likely to come here, hold it, and then make another move up higher. And that's when I would be looking for like a rising structure, a bearish rising structure. It could be like a rising wedge, could be just a rising triangle, however you want to describe it. That's when I would look for it to break down. We have something kind of trading like this, and then it'll break super low, probably back down towards 75. But in the end, on the monthly chart, the weekly chart, it's still bullish. It's just in a major bullish consolidation. All right, next is gold and silver. So gold to me is looking ready to have finally a pullback. We can actually get rid of this fair value gap right here because it filled it out completely, almost tapping into the higher one up here. But this looks toppy, right? It's had a massive extension. We were bullish down here, closed out pretty much all our gold positions around this area here, and then we had this really crazy extension breaking past the rising triangle. And in my opinion, we have a ton of liquidity to come down to fill. All right, we have so much liquidity down here, and I am bullish on gold. Even now, I do think that gold is eventually going to get back towards 2,000, but I do see a significant pullback of some sort coming. And ideally, it comes back to 1,800, and if it could hold 1,800, that would be an extremely bullish structure on gold. And then I would be looking for 2,000 and potentially 2,000 plus, depending on what the dollar is doing. All right, next is silver. Tap into that real quick. So silver, building out a much more bearish structure here. All right, so this structure is much more toppy, a lot of indecision, a lot of fighting between the bulls and the bears. But here's a hint, that I try to, kind of give people: whoever in a consolidation needs more candles to move price is losing, right? So if you're seeing, the bulls are moving price, 3 candles, and it only takes the bears 1 or 2 candles to move the same amount, the bears are going to be winning, and vice versa. So in my opinion, this looks more bearish than bullish. The price action seems pretty clear that it wants to break down, but I am thinking that silver has been waiting for gold to finally lead that breakdown, and I think gold is probably ready. So I would be looking for early in this week that's coming, gold to break down, and that would also give us a little bit more evidence that maybe the dollar will see some upside, this week, or at least, a good chunk of this week, right? All right, now let's take a quick look at Bitcoin, see what's going on with Bitcoin. Bitcoin's been doing very good of late. See how it's doing. So the daily showing potential continuation here. Now, what's interesting is we're in a pennant on the smaller time frame. So let's go down to the 4-hour real quick, or at least we potentially were. I think we may have just officially broken out. It depends on your definition. So when you have these like wicks up like this, it's really fake outs to punish breakout traders, but it doesn't really invalidate what's been happening here. So you had this high pivot here, and then you have pretty much the higher low structure forming, right? So you have this, I probably drew that incorrectly. Let's pull it down a little bit more. So you have this rising pennant structure after, in this uptrend, okay? So this was bullish already, had a bullish bias. This is pretty clear on the 4-hour and the 3-hour and the 1-hour. And the daily was a little bit less bullish, but it wasn't super bearish either. It was more indecisive. So I did have a bullish bias, just looking at the smaller time frames, and it was very likely that they would lead to a breakout, and that's what we're potentially seeing now. Again, we want to give this more time, but this is looking pretty strong. But it is the weekend, so volume levels are going to be a little bit lower. So you don't want to jump the gun on things, but if this should confirm, we should have more decisive price action going up a bit higher, breaking back towards 24,000 almost. Then look for a continuation to attack this imbalance over here, right? So this is what I've been calling for quite some time. I think a lot of people are getting caught short. they're getting kind of beat up. And a lot of times it's because they're not really looking at the bigger picture. They're seeing, oh, the daily broke out, but it's not really the daily breakout. It's a weekly and monthly breakout, right? So let's put some lines on the chart real quick. So we've been in my opinion, a bottoming structure. Okay, so it's not the bottom, it's a bottom. So if you go from these pivots from here to here, all right, so you are in a wedge structure, all right, and this is what you want to see in a trend that's waning, right? So this is usually the sort of structure you see, in a textbook when you're looking for a reversal of a trend. Now, it doesn't mean the trend is over to the downside. It just means a resting period, and that's usually what's called like a bear market rally, a sucker's rally, and that's what we're having here. Broke out on the daily, had a consolidation, continuation, more consolidation. Now we'll see if we get that continuation if we break past 24,000. The weekly is showing continuation, right? So I warned here on this candle, look for continuation. And now I'm warning here, I warned in this candle, look for continuation. Now if we close above the high of this candle right here, so the high of last week, which is about 23,380, then I'm telling you, watch out for continuation, okay? It'll be very likely you will see continuation. Now, this weekly candle here is getting smaller compared to the last couple of weeks, but you have to remember we've been consolidating in this week for most of this week, right? Take a look at the daily, been consolidating most of this week, all right? And it's still a bullish consolidation, so do not be fooled. If we do close above 23,380, but it looks like this is not a candle that normally initiates a topping structure. Not at all. Okay, this tends to be in the daily time frame. On the weekly, it looks like this, but on the daily time frame, it tends to be a bullish consolidation, a bullish structure. All right, so you have to really want to study the nature of candles. It's really good to understand them, to understand the context of price action. So this is not bearish, and it's not indicating any sort of topping or slowdown unless we take out last week's high and we close under it. Okay, so we have about 5.5 hours left in this weekly candle, so we'll see if we close. Now the monthly is also telling another story. The monthly is implying this is just the beginning, right? The beginning of a continued breakout, and it looks very likely, at least from the monthly standpoint, that we want to attack these higher liquidity zones right here. So this bearish fair value gap right here. So you might see an extension if we can get decisively past 25,000, an extension towards 28, 30, and potentially even 30 plus. All right, so it may look crazy on the daily chart, but on the monthly chart, this is not that far away now, is it? And then, like I've mentioned in the last couple of recaps, this move, in my opinion, looks very similar to what happened in 2017. We had the all-time high breakdown, okay? Then we had multiple months, just like this, multiple months of consolidation, and then we had a breakup, a bear market rally in 2019. That's what I'm seeing here, a bear market rally to make another macro lower high from the all-time high. And then you have your continuation of the macro bear market. And then this candle right here was the COVID lockdown capitulation candle where Bitcoin just dumped to like 4,000. Right? Okay, so I'm seeing something similar here where we've made the all-time high, right? And we're now doing a bear market rally. Potentially, maybe the lower high will be from here. Okay, let's say this is where it is. And then you have that continuation lower. Okay, how low? I don't know, but it's likely to come at least back down towards these levels or potentially lower. In my opinion, it looks likely to come lower, but we'll see. All right, and also in my opinion, this looks very unlikely to be the actual bottom. Now, it may. I don't trade my opinions. I'm just giving you my opinion. I don't trade. I just trade what I see. But it's very unlikely to actually be the bottom structure-wise. But overall, if we look at the monthly, we look at the weekly, and right now, as we look at the daily, it's bullish and it looks like continuation. Look for 24, look for 25, and you're likely going to see 28 to 30,000. All right, so that is it for the overview, for the recap. If you have any questions, make sure to join the Discord so you can ask me there. It's the easiest place to get in contact with me. And if you have any questions in regards to the services I provide, check out the Patreon link or ask me on the Discord. All right, everyone, we're done with the recap. Since most people, some people want me to record the Q&A. I'm gonna record the Q&A a little bit, guys. We're not gonna do the whole recording because I don't want the video to be that long, and I want people to feel comfortable enough to actually talk. So for like, I would say for the next like 1 to 3 questions, depending on like how deep the questions are, I'll record, and then after the third question, I'll end the recording, and then we can hang out. If you're in the live chat, okay? So does anyone have any questions, whether it's charts, whether it's my opinion or something, whatever? I'm open.
Oh, bro. Can I ask, how long have you been trading cryptocurrencies? And how long have you been using the strategy that you teach us about?
Okay. So for cryptos, I've been trading cryptos 26 like early 2016, late 2015 is when I first got into them. Now I don't know if I would consider that trading, because I just like kind of invested, right? Like I bought a little bit here and there. I got heavy into like a couple coins. And then I would say late 2016 to like early 2017 is when I first started to actually really trade it, right? Like I was like, all right, I'm not just going to hold it. I'm just going to kind of swing trade. And the strategy I use, is actually not the one I'm really showing on screen right now. I still use the strategy. I mostly used, at least back in the day when I was a younger trader, Ichimoku, right? So Ichimoku was my main way of trading. Now, I still use it. I just don't use it the same way. Now, this used to be my everything, where it told me to do whatever, whether it was buy, sell. I used to just follow it. Now, because I've learned price action, I understand. As my account has gotten bigger, I need to chase after liquidity more. I need to get into better, more optimal entries to where I don't move price as much. I can't really. I don't want to trade the same way as I had. So I became more of like a price action buy the dip swing trader. Right, so my trades would like take much longer, but my entries would be much better. So I've been trading that way in stocks for many years, though. I've been trading that way in stocks for, I want to say, since probably like 2015. 2015, and then crypto, I mainly stayed with Ichimoku until around like after the 2017 bull market rally, right? So after 2017's rally, I stopped using Ichimoku, and I was like, all right, I'll use it to see the strength of a trend, but I'll just look to like buy, supports and resistance, liquidity levels, and such. And then I've slowly adapted like fair value gaps into it. Like it looked fair value gaps specifically. I adapted about last year. Learning about them, they paired well with what I was already doing. So.
Oh, wait, sweet. And can I just quickly ask, fair value gap, can you just define that for me? Just so that I don't misinterpret it.
Sure, yeah. So, fair, again, not my creation or anything. So fair value gaps were discovered by ICT, so Inner Circle Trader. You guys could check him out on YouTube. He has a whole ton of trading trading theses and such. So fair value gaps are kind of like, the best way to describe them is kind of like leftover liquidity. So the best way I can describe it is kind of picture. Let's actually take this off so I can give you a good example. So kind of picture like you have a limit order kind of that you've had in place for a good period of time. So let's say you actually had a sell order here, but price moved so fast you didn't get filled. That actually happens more often than you think. And then also you may have like a buy stop or a sell stop where you're just waiting for price to get there, and it'll automatically trigger an entry for you or an exit. So what this tends to be is it's like a little visual of where this has not been filled. And one of the best ways to kind of see that is if you've ever painted a wall with a roller. If you go up once, you'll sometimes see like little air bubbles, like little pockets where you need to go over it again with the roller. That's kind of what price does, right? So you have this major move up where there's no pullback, right? There's no pullback over a couple months, and then price makes its way back down to fill out all the liquidity in these fair value gaps. This whole imbalance gets filled out because it's like the liquidity must get grabbed so it can potentially go higher. Right, you run out of enough fuel up here to continue higher. So the market maker or the big money entity will come down, grab the money that's here, and then pull up. That's the idea. That's the idea.
Mm-hmm. No, I agree. I see that. That does make sense.
No problem. Anyone have any other questions?
Yeah, hello, Lemons. I
So,
have two questions. First one is, what do you think of pivots and especially Camarilla pivots?
so like so when you say pivots, like just support and resistance pivots, like S1s, S2, S3, like that, or are you talking about
Yes.
I mean, they're fine. I mean, they work fine because what they end up just being, they tend to correlate with Fibonacci, but that's only because they're correlating with consolidations, right? So what happens is there's like this there's this weird thing in this world of charting where everyone thinks one thing is doing another, like one thing's doing better than the other thing. It's not really true. They're all kind of telling you the same places. If you look closely, you put them all in the chart at the same time. They're just showing you this, right? So here's a pivot right here, and then here's a pivot right here. Okay, so
Yeah.
that's it. Right now, you'll get like different measurements of like within this, you have a 50% here, 68.7% here, whatever. The point is, you're just getting a general zone of where there were consolidations. That's what it is. Like you're getting this general zone of where there was consolidations. Like you could easily just do this on your chart, where if you don't want to have all those lines, you just want boxes, you could literally just do this and go back all the way. And what you'll find is, as you do that, you'll find that price always comes back to those boxes. It doesn't matter what you really put on there. Pivots work fine because it's following price action. It's just following price actions, highs and lows. What I will say is, I personally like, so I like fractals a little bit more. So fractals and pivots are generally the same thing. Now, the reason why I like fractals a little bit more, if you're someone who wants to kind of be as fast as possible in identifying price action, like what you're seeing, fractals to me give you the best shot. So if you can see that you're in if you could read market structure and see that you're in a bottoming structure, right? So what tends to happen in bottoming structures, you'll get like a double bottom, right, or Adam and Eve, right? So arguably you had an Adam and Eve structure right here on Bitcoin, right? So you had a Adam who's a little bit lower and an Eve who's a little bit higher, but they're both double bottoming structures. If you could see the fractal of Eve, you could immediately get into this position. And the way you would do that is you have to be able to see the fractal, right? So you have to see the fractal, and the fractal's right here. And fractals are really easy to see with the naked eye. Again, there's indicators you can use to look, but they're really, really simple. So it's literally just all you're looking for is a three candle structure. I know these lines aren't straight, my apologies, but essentially for an up fractal, you want something like this, where the candle to the left has a lower high from it, and the candle to the right has a lower high from it, and then vice versa to the downside. The candle to the left
Yeah.
has a high, and the candle to the right has a high. If you could identify this when you were seeing like, okay, we're potentially in this double bottoming structure, this is what you would look to get into. And there's a lot of price action traders that really are good at pinpointing fractals. And if you can do that, I mean, you can get into stuff really quick. Here's actually an indicator right here that kind of shows it to you, right? So, but to use this effectively, you need to be able to identify the structure you're in. So I like fractals more, but pivots work just fine, especially for take profits. I will say that if you want to take profits with pivots, those are great. They're great to take profits with.
Nice. Thank you. Have you ever traded them, like based on them, based on pivots?
Not solely off of pivots. I've used pivots
Okay.
before. Like I've used them before, but I ended up falling off of them just because I was doing price action stuff that was like, oh, I was already kind of hitting them. It's like I found that I had them on the chart, but I was targeting those areas anyway. Whether they were there or not, for the most part.
Nice. And the other question is, do you do on-chain analysis? Like, for example, on stocks, people look at earnings and stuff like that, or numbers on the company, that you have to wait for some date and you raise volatility that day. But in crypto, you can always check on-chain. So, do you pay attention to that?
So for crypto, I don't. So crypto, I tend to ignore the analysis. Now, I'm not saying it doesn't work. I crypto. The thing is about news. it's you can usually see the nature of what's coming in the chart. If that can usually be seen, so you're usually on the right side for the most part. I mean, there are times where, of course, things happen, you just won't know. So I usually stay away from the analysis. Not that it doesn't work. I just don't want to confuse my view of what I'm seeing in the chart. When it comes to stocks, though, so stocks are a little different. I do have some fundamental analysis now. The fundamental analysis doesn't really get me to where I'm going to sell or buy something. The fundamental analysis I'm looking at mostly is revenue and its ADR, so its average daily range. So what that means, when I'm looking at a stock, one, it needs to have decent liquidity. Secondly, it needs to be a mover, and that's what the average daily range is. And the average daily range is correlated with its revenue growth. So in stocks, I'm mostly just interested is this company's revenue growing quarter over quarter, and what's its daily range? Because if it's a slow mover, I'm not super interested in it.
Bro, another question. In Bitcoin, what's your minimum ADR for taking scalps on, let's say, 15 minutes? Like, I've seen $100. It's okay, but less than that is dangerous in commissions. What do you think?
So so this is also where identifying market structure is actually very important because it's not going to be the same all the time. Now, if you're in a range, like, or you're in like some sort of consolidation, right? So we were in this major consolidation. Yep. Even in here, there were times where that comfortability of where, okay, I can look for $100 scalp here turns into, okay, now I need to look for $500, $600 scalps. But that also means that the risk is much higher. You need to be able to identify when you're going into like a trending state. So like in this case here, like scalping doesn't really make much sense, right? It doesn't really make much sense. You might as well hop in long or stay out of the way because of the risk. Ideally, I don't think there's an ideal number unless it's risk you're comfortable with. So whatever risk you're comfortable with is the ideal number. However, before you actually scalp and have a set like dollar amount that you're looking per target, right? I want Bitcoin to move 100 points in this trade. You need to see if the market actually agrees with you, because the market might be saying, no, Bitcoin is in a trend, so Bitcoin's going to move 671 points today, right? Like, so you need to make sure that if you don't, I wouldn't have a ceiling for yourself. I'm not a big fan of that. I would look to just, if I were you, focus more on the trade setup, right? Focus on the trade setup more and the risk. And then whatever the target is profitability wise, it is. I would mainly just focus on the risk. However much points it's going to move in that day, I wouldn't really focus on with Bitcoin. You have to be able to see if it's trending or not. If it's trending, then obviously, it's gonna. You should be looking to get it onto the trend or staying out of the way. And if it's in a consolidation, you need to be very good at having a master time frame, whether that's the 4 hour, 1 hour, because I know you said 15-minute. Is it showing signs of like this happening, right? So you were in this for days, right? And then as you're going to come into scalp short here, is this showing an impulse? Because right here is huge, right? So this was a 300 point plus candle, and then the next one, the one before, was just under 300. So it could really, I wouldn't put that ceiling on yourself at all. You'll miss out. Yeah, you'll miss out on a runner.
Yep. It happened.
Yeah, I've been there. It sucks. It sucks seeing something go in the way you thought it would much farther.
Yep. Thank you, brother. I have more questions, but if anyone wants to continue, I don't want to be the only one asking.
No, man, you're free to go. If you want to go, keep going.
Yeah. I'm doing this volume profile analysis. Like, I'm studying over the internet and stuff, and I saw 6 different volume profiles. And I want to know more about them, because there's not much information. Like, you have a P volume profile. Like for example, this volume profile is that you're showing. It's telling me this is a double distribution with a bearish um, structure because most of the volume is down. But obviously, if that is if it's not taken, it's super bullish. So I'm lacking to find information on bullish on volume profiles. Like I know there's the balance one, the double distribution, the neutral one, but people are not saying too much about them. Maybe it's because it doesn't matter. I don't know.
So for the ABC, so it's the I don't know if they call it this anymore, but it's the alphabet strategy with volume profile. So let me pull up this. So for me, that strategy really only works for sessions, right? So you need the session volume profile. So I just put it on here. Let me go to the 15-minute or something. Actually, we'll do like something smaller. We'll do the 5-minute. So, all right, like again, just I don't really use volume profile. I've used it in the past. It has its uses, but for my trading strategy, my style, I don't use it. But so the alphabet strategy with volume profiles do work. So the idea is you have essentially overall shapes that tend to look like letters and in the volume profile. So this is like the uppercase B, which is actually bearish, right? It has a bearish undertone, so small top, big bottom, and then you have the D, which is or lowercase b. Sorry, this is bearish as well. This tends to mean bear flags are forming in the markets, right? And then you have the P, which tends to mean that bull flags are forming in the market is bullish. Then you have D, which is the distribution. Like this is this is probably my favorite. So this is the equal distribution. Yeah, like that's probably my favorite. And there's a couple others. So essentially, this idea attempts to give you what you should expect in the session market wise. Now, what I will tell you is I find it to be a little bit more complicated than it needs to be. All right, so you can cut this out, these two out, because all you need to look at for this and this in this structure, all right, in the lowercase b structure, where it usually means you're in a bear flag structure or you're building out bear flags. Just look to see am I making new lows, right? So are we in a trending structure to the downside? Because that's what this means. So are we just having consolidations, breaking down from those consolidations, rinse, repeat? If you can see that in the price action, you don't really need to see this. Same thing here.
Yeah,
it's upside.
Actually, my preferred bullish profile is the bearish one, the one on the left down. But when price never reaches that POC, that is my preferred bullish by far.
So when it front runs the POC,
no one's gonna get that.
So like what you mean, like it front runs the POC, like it never gets to the POC?
Yes.
Okay, so
yes, that's
reversals.
That's what I've seen, that it leads to the trends that are bigger.
Yeah, well, because you're catching reversal, right? Or the V bottom, as they call it. Like you're catching that reversal. You're catching like something like this, where like it comes down, then front runs it and goes up. If that works for you, man, go for it. It's like there's a lot of strategies out there that will work as long as you have your risk management under control. Yeah, it'll work.
When you're talking about it, I'm not gonna go too much into it because your style is goals, and this seems complicated and not very rewarding.
It's I'll say this, when it comes to like volume profile, I would ideally I like it with like range bars. Like I like it with I don't really like it with candles, right? And I would like it with some sort of tick chart or a range bar. And I wouldn't be trading crypto with those charts. Like I would be looking to trade like equity futures, like the S&P, like the the minis or something like that.
Have you traded Bitcoin with clusters, with Delta clusters?
Not personally. No, I've seen people post stuff, but no, not personally. I've not really messed around too much with like changing like the candles and stuff. Like I've changed candles here and there. Like I have history using Renko and using Heikin-Ashi, and those actually work fine. But like when I'm like big boy trading, like I'm trading like for real, I mainly use the candles because I just know most about them. Like that's what I know most of. But there's nothing. I want to make it very clear. Like there's no like best way. The best way is like whatever way you're comfortable trading, that you're consistently profitable and not risking to blow up your account. Like that is the best way. And if your way is clusters, profiles, more power to you. Go for it. There's no one best way. The only thing I will say, there are ways that have worked for a long period of time.
I'm just looking at it. I'm trying to find a simple way to trade, and so far yours is very consistent, easy to understand, and it makes so much sense on higher time frames.
Well, the
I'm
way I trade is super simple.
away from order flow and stuff like that because it's too picky, too small time frame. I don't know.
Yeah, again, they have their uses for sure. I'm not a smart guy, like I need to simplify things for me to be able to do it, and be consistent. So I've just strive to do that. And then, in the end, like even when I was using Ichimoku, the reason why Ichimoku works is because it's a breakout strategy, right? So I always tell people this, it's like Ichimoku is a breakout strategy. So any breakout strategy will work. As long as you have the right risk profile, you have the right risk management. Like breakout strategies have worked for 100 years. They're likely going to work for another 100 years. As long as markets trends, breakout strategies will work. Are they the most ideal strategy? For some people they are. For some people they're not. They have a higher lose rate, but their winning trades tend to dwarf most of their losers. And some people can handle that. Some people need different styles that fit their personality, right? Because even though this may work, it just may not work for someone else. That's what makes trading pretty incredible, because there's a lot of ways to be successful, and there's only one way to be unsuccessful, and that's just to be irresponsible with your money. Because that's all it comes down to. It's always you're irresponsible with your money when you're not successful at trading. That's what it comes down to.
I was listening.
Yeah, go ahead.
Well, no, I was listening to your basic stuff yesterday, and I wrote some things. And one thing that I've been able to do everything but one. Like keep your losses small. Like when I lose big. Like because I mainly do range trading, and I want to cut that, and it's mainly because like you run out of liquidity to keep doing that. Like your TA is good, you're just not getting precise, but I don't know 0.5%, and that fucks up everything. Like that's what I'm thinking of doing, more trend style, or I don't know if you can expand of that, like how to keep your losses small.
Yeah, so losses small. I'll say this. So for range traders, it's a little bit harder. I would say, I want to say range. It's like consolidations, like in rest periods. I like to call it rest periods. So markets are resting most of the time, right? So like they do a big move and then they're resting most of the time. So the reason why it's really hard for, I would say not really hard, but it tends to be harder for traders who are targeting resting areas to be consistently safe with their risk, is because they get trained. Now this is not like I don't want to make this an insult, like, 'cause this is how human nature is. We're so pattern oriented. When something's been happening for so long, you expect it to continue, right? So like when you've been trained to buy down here because it always comes back here, the one day it doesn't do it, it leads to this moment of cognitive dissonance, right? So there's like you know the truth. The truth is this range just broke, but it always went back up, so you're frozen. And what happens with a lot of younger traders and just traders who are still going through the process of losing the connection to their win-loss ratio, essentially, is they will defiantly try and save the trade, right? There's times and places where you can protect yourself via the trade. Like if you're looking at DCA, within a structure, that makes sense. If you're eyeing a specific structure, like, okay, we're in this box, or we're in this wedge, or we're in this flag, I'm gonna, DCA long or short in this structure, and it should break my way. And if it doesn't, then I'm getting out. That makes complete sense. That's the correct way to DCA within an actual box of something. But once the box is broken, right? Once you're wrong, you're supposed to get out. And a lot of traders, especially traders who focus on consolidations, ranges, etc., they have a hard time because that moment, that cognitive dissonance, and then it does lead to having bigger losses. What I would tell you is, you want to have a stop loss. So what I would say is, again, it comes back to you still be able to do it no matter what I say. You're just going to want a stop loss that's like defiant, like it's where it is, like you can't touch it. Like you just can't touch it. Like if you're trading like a double bottom structure, and you're so sure that in the consolidation that we're going to go back up, but it comes back down, take out that double bottom, you should have a stop loss under there. Like you must have. Like you're DCAing within that structure, it can't go lower than the actual structure. It's because it's gone. Now with trending strategies, it's a lot easier. It's a lot easier. Now there's still people, still plenty of people who won't do, like they'll lose money. Don't worry, they'll lose money because people will take risks. But it's easier in trends because depending on your strategy, you have a set level because you're following a trend. And if you're in a trend, the odds of your trade being successful within the trend is much higher. It's much higher than normal. Now, it's not super high. It's much higher than normal. Now, for example, if you were looking to go long here, right? So this would be incorrect, but let's just say you went long here for some reason, all right? You missed out all this, and you just decided, you woke up and said, oh, it's up here. I'm going to buy here anyway. And then you went to this consolidation moment, and then you had a pullback. Now, what most people tend to do is, if they're using a moving average, which is probably the most common indicator, or one of the most common indicators. So here's a moving average. I think that's the 10, 20, and probably the 200 or something. They'll have their stop loss under a moving average, right? So they're protected in that way that they don't really make any decisions. As long as they have a stop loss, it's probably going to get triggered, and they'll get out of the trade. Now, other people will have it where they have their stop loss directly under the candle they bought, which is another great strategy in trends. Because if you're in a trend, as long as you're continuing, there's really no reason for it to come down and take out your candle. It should just continue higher. So the trending risk profiles are a lot easier to actually put into practice, whereas ranges is a little bit hard because you get more comfortable. You get way more comfortable because you get used to something. So I guess that's the best way to put it. In the end, it just comes down to like you just have to be disciplined, and you have to remind yourself if you're wrong, it's best to be wrong where you know you're wrong rather than be wrong lower or higher.
Yeah.
And just be like, oh wow, look at I did it again. Always ask yourself, where is it cheapest to be wrong? Because you're gonna be wrong. So always ask yourself when you go into a trade, where is it cheapest to be wrong? I ask myself that every trade. Every trade.
Good thinking. Good words, dude.
Thank you, brother. Anyone have any other questions? If not, I'll just end the recording. But we could definitely hang out because I'm not gonna run away just yet. But I'm gonna end the recording here. So just because I know we've been going for so long. Guys, thank you guys for coming in live, and if you didn't make it live, thank you for watching the recording. And like I've said, check out the services if you're interested in any of them, or if you have any questions, leave a comment or join the Discord and ask me there. And remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.